Hi guys, hope you're well. It's me, Samuel Ajala, and welcome to another episode of Finance for Founders. Today, I have a very special guest, yet again. I'm thrilled to introduce Helen Vines. She's highly experienced chartered tax advisor who helps businesses unlock significant tax savings through strategic planning around capital expenditure. Helen's specialism includes capital allowances and remediation of contaminated land claims, areas that are often overlooked by businesses but can have huge and financial impact when properly understood. With a deep expertise in these complex areas of tax, Helen has helped countless companies maximize their tax reliefs and reinvest those savings back into their growth. If you're a business owner or a professional interested in maximizing your capital investments, this conversation is packed with actionable insights. Helen, welcome to Finance for Founders. How are you, Helen?
Very well, thank you, Samuel, and I hope the same for you. Yes, it's a real pleasure to be here today. Thank you.
Fantastic. So tell us a little bit about you to our viewers and on a personal level. Just tell us a little bit about yourself.
Well, I suppose I started out in tax 20-something years ago. I worked in a very large company. I was in their accounting department just out of university. And I noticed there was a job came up in the tax team, joined them, and the rest is history, really. I then went, I started studying Association of Taxation Technicians, and then into the Chartered Tax Advisor exams. And meanwhile, whilst all of that was happening, I moved into the Big Four and stayed there about 20 years. So yeah, I've been, in tax all my professional career. I was in the corporate tax teams in the Big Four, and then moved into capital allowances. That was really driven by my clients, to be honest. Most of my clients were really asset-heavy clients. If you look at their balance sheet, it's pretty much all assets.
Wow.
And they could really, capital allowances was the key to them in terms of what made a big difference in their corporate tax returns. And so that naturally led to a specialism from my point of view, which then developed.
Fantastic. And so what would you say, or where was the point that you realized that you were passionate about taxation and what it is that you do?
What I really like about taxation is it covers just every aspect of life. There's the old, I think that there's a very unfair, to be honest, adage about tax being boring. It changes every single year. It changes with legislation every single year. The Chancellor comes out with their red book and tells us what's going to be new that year, and then also tax cases come out every year that slightly change the interpretation of the legislation. It often talks about the way that whatever is big in construction, so we talk about green assets, things like that. That has been something in the past, and whether or not you can get relief on those sorts of assets, and the amount of relief that might be available too. So it's a fast-paced, always changing, and actually very interesting career.
Excellent. In your journey in taxation, was there any pivotal points, any mentors that helped you shape your specialist areas? Any mentors, anyone that played a significant role in your choice and your particular role now?
Oh, too many to mention, Samuel. Big thanks to all of them. Let's be honest, any of them that are listening today. I can think of so many that I suppose the people that are ahead of you in the career-wise, they can demystify so much because of their training, the things that they were told, the grey areas, all of that sort of thing, how to deal with a particular prickly sort of situation, and and what to do in those circumstances. So yeah, so many have helped me in the past. Too many to mention. But, that's in a 20-year career. You'll appreciate there's been quite a lot. And the good thing about, from a tax point, capital allowances particularly point of view, it's not just the tax legislation you're looking at. It's also, there'll be construction specialists as well. There will be legal specialists, all sorts of different specialists combine in terms of the people you work with in this career.
Excellent. You mentioned something earlier on. Is it did you say green belt businesses or green belt? What do you?
Yeah, so there are a few incentives these days for in terms of green sustainable assets, if you like. And one of the key ones that I look after, you were talking about earlier, was remediation of contaminated land. So that is where a business can claim tax credit in order to remove or in some way control a contaminant on land or property in the UK. So that's something that's a major interest, I suppose, to a number of businesses or companies actually that are investing in that area. It brings property back into use and it makes it safe for future use. There's also there used to be a tax credit in the past for energy and water efficient technologies. That doesn't exist anymore. But then there are, for a short time, some tax benefits for tax incentives for CO2 efficient cars and goods vehicles, also electric charging points as well. So there are some areas of the tax legislation that are directly targeted to that. But then wider than that as well, there is capital allowances. So for many people, you could get potentially up to 100% relief on certain assets that you're installing, or 50% relief in other instances, and that can have a real saving against people's tax bill.
Fantastic. What are the kind of companies that have really benefit from your service? If you could just kind of walk us through how they, because you help both businesses that are property related businesses, and you've also just helped the standard business owner in terms of some of the service you provide. So you want to give us an example of how both sets of companies have benefited from your service?
So I'm not quite sure. So I say, from the perspective of property clients, I've got clients that are constructing properties I've got clients that are constructing properties for rental purposes. I've also got clients that are constructing properties for their businesses, and for instance, they could be restaurateurs, hotels, care homes, industrial clients that are using business for retail purposes, all sorts of different usages of the business. But as long as they're holding it, I suppose that's where, from the capital allowances side. I should also say that from a contaminated land tax relief side, it could be if you're holding the asset, or actually if the asset is a stock in trade type asset as well. Those are the clients that I'm helping, and then also I work with a number of other advisors too, feeding into their advice for clients.
Fantastic. Regarding the contaminated tax claims that you make,
yeah,
right, to the average person that has no clue what that means, what can benefit from your service,
mm-hmm.
If you can explain what that means in very simple. So let me give you a scenario. If I buy a property, an old warehouse, and I want to convert it into 20 flats, for example, right? In a situation like that, how could your service benefit me?
So in that 20 flats, let's say an old warehouse, I suspect it potentially may well have some asbestos sat there. And as long as you are in no way connected with the original polluter of that particular contaminant. Then let's just say that you spent, I don't know, let's keep it simple, 100K removing that. Then from a contaminated land tax relief, we need to go through all of the hoops and make sure that we qualified. But if you, of that 100K, let's say the 100K was qualifying for contaminated land tax relief, then if you were a loss-making company, we could get you up to 24K back. If you were a profitable company, then it would offset against your tax bill for the year, and you should get roughly sort of 37.5K back for every 100K of qualifying spend. So it's big, it can make a big difference. Most businesses, I should say, 100K removing asbestos is probably on the toppy side, let's be honest, but it then moving through into capital allowances, then you've got a block of flats. So capital allowances, if you're going to rent those flats out, where you've got a rental business, you won't get capital allowances on the actual flats themselves. But in the communal areas, that sort of thing, then potentially there's capital allowances there for communal assets.
Fantastic. So you mentioned for every £100,000 spent, possibly 37,000 is what would be
for profitable companies, because it's 150% relief effectively up to, but yeah, so that's the contaminated land. But as I was saying, 100K for asbestos removal is on the high side, but it's not unheard of. I've got clients that have spent a lot of money removing contaminants. We mentioned asbestos, but we've also got things like hydrocarbons. So I had a client who had a big property in London that they had to remove hydrocarbons from. Then also there's Japanese knotweed, arsenic, radon as other examples of areas where these contaminants might exist. Of course, with any tax incentive that's beneficial, there's lots and lots of rules that we need to follow. And so it is something that we need to, in every single client's case, consider in detail as to what costs might qualify, what of the activities, the decontamination activities might qualify, and then what we think the realistic saving would be in their case.
Fantastic. I'm very much into properties myself, right? And I had a situation where we were about to embark on a build, and we saw quite a lot of Japanese knotweed that you just mentioned.
Yeah.
I never thought it was a big deal, right? And I realized it's a major deal. It's a major problem.
Expensive.
Talk me through how you're able to assist me, or a case study where you've actually helped somebody overcome such scenario. What the costs were, how you overcome those challenges and the cost through the services that you provide.
Well, I mean, obviously there are instances where Japanese knotweed has been, it has been necessary to remove Japanese knotweed from a property. I can't remember the numbers off the top of my head, but there have been instances where I've helped clients claim in terms of making sure that there are specific rules with Japanese knotweed as to the types of claim and the extent of the claim that can be made as well. So let's just say that is something that I've had to look at in some detail with those particular clients, exactly what was done, exactly the processes and procedures and how they've controlled and removed eventually the Japanese knotweed from their claims, from their properties.
Fantastic.
That's been the key.
Fantastic. So what a cost to cover the Japanese knotweed were contributions made via capital allowance or a land claim?
It's a specific corporate tax deduction. So it's not in the Capital Allowances Act. It's a specific corporate tax deduction.
Fantastic. Are you surprised how many people, when going into development, are not aware of some of the benefits that actually they could take advantage of?
I wish I could say I was surprised. I think that the tax legislation has become so vast that particular elements of it, which could maybe be considered niche, just aren't publicised very well, and just and actually are often found out after the fact rather than before, which is a shame because I think that they could really drive particular behaviours.
Fantastic. I think my next question is, what excites you the most about helping businesses navigate tax savings related to capital expenditure?
Well, I suppose I am a business owner myself, and you are acutely aware as a business owner of, I need to pay staff, I need to pay costs, I need all these other things that bills that are coming out, and the need to really progress your business as well, and you need cash to do it. So what really does interest my clients, and like I said before, one of the reasons I ended up in capital allowances is because my clients were so interested in capital allowances. What does incentivize me as well is to help them as much as possible to achieve their goals, and by doing that, generating cash for them as well. And it's also about being on the front foot with these things, because sometimes if you look at it historically, it is possible to make a claim, but being on the back foot can often mean that you don't necessarily have all of the information you could have, etc., etc. So being as on the front foot as possible, being as organized as possible, trying to be there ready to make the claim at the right time can mean that they achieve the savings as soon as possible as well.
Fantastic. Do you have any memorable stories about clients who you saved significant taxes for, and were even surprised at the fact that you were able to save them such amount of tax?
Yes, I suppose surprise probably isn't the case, because I think for most businesses you do kind of know where they should end up based on previous experience. And but I mean, I had a client, for instance, hotelier, who they'd built a large hotel, unsurprisingly, and hadn't been claimed on. Their accountant didn't know how to make the claim, and also this client had sort of constructed it in a particular way as well, which made cost extraction a bit difficult in that case. Furthermore, the business was expanding really rapidly. Once they had the hotel, then they were filling it really, really quickly. And I was brought in to help claim the relief. So the client was heavily tax-paying and really, really needed this relief as well. So overall, this is a client's personal company, and claimed almost 500k tax savings in the first 2 years using a corporation tax rate of 25%. That was a real success story for them. For them, they've really learned something from that as well, where they've decided to get me involved in other projects that they're doing. They've also got significant finances to manage, and they needed to pay interest and things on that. So they really needed that cash from the tax savings to facilitate all of that, really, and to help them grow their business, which is still growing today.
Fantastic. If you don't mind me asking, I'm going to be cheeky here. How much would you say, since we don't know the company, how much would you say you were able to save them? What was their spend in relation to what you were able to save them?
Well, all of their expenditure actually, pretty much all, qualified for a form of relief. But some of the relief achieved tax relief at a slower rate than others. So for the mechanical and electrical installations, for that particular client, they were able to get 100% relief on that in year. And so some other clients might find that, for instance, some of that might qualify 50% relief. It all very much depends on the client's tax profile, but for them, they were able to get a good quantity of that as deductible in year one.
How do you approach clients who are skeptical or unaware of the benefits that you can provide to their company? So, for example, I've mentioned we have quite a number of companies that are doing some form of development, and they just have no clue whatsoever of the tax savings, the benefits,
Yeah.
capital expenditure that could actually benefit you. How do you overcome these hurdles? So, for example, I may speak to a client and I may say, I'm going to refer you to one of our partners, Helen. And they literally are, why are you referring me? Aren't you my accountant? And I'm like, okay, but she deals with capital expenditure. And what is capital expenditure? How do you overcome those hurdles and let them see the benefits that you actually bring to the table for them?
I think it's really talking to people and explaining the specialism. To be honest, I suppose if you were thinking about it, I wouldn't ask a GP to do heart surgery, right? I would want a heart surgeon. So in every profession, there is a degree of specialism, and specialisms have come about because, I mean, the capital allowances legislation is its own act. Because of and from that reason, I suppose you have specialists in the capital allowances field. So that is how I would put it. That accountants are great at the day-to-day running of the business, but quite often a lot of these builds as well are one-off as far as the client is concerned. And so you might also that particular client might not even need my specialism for more than 1 or 2 accounting year ends.
Fantastic. The reason I asked you that, in fact, I'm going to have this follow-up question actually, is that due to some people's lack of knowledge about capital expenditure, I have found that even when I approach some of our clients, they don't think that their projects they're working on is large enough to seek a specialist tax advisor in this particular area, right?
Mm-hmm.
One person comes to mind in particular, and he was just bought a property, I think did an extension, done some refurb, spent about £50,000, right?
Mm-hmm.
And he's in his mind, I thought to him, I asked him a question, why do you think it's not big enough? And he said, oh, it's not a development, you build from the ground up and so on and so forth. Are you able to debunk that myth that you have to be of a certain size? And what is the smallest project that you've potentially worked at that has benefited your client as well?
I think all of these clients, will have. So 50K might not sound a lot, but it is a lot to that particular client. And furthermore, there's going to be elements of that qualify for one particular relief and elements that qualify for another relief. And it's really important from the client's perspective, I suppose, in terms of legislation, to make sure we get that right as to which box that falls into and to how much they can claim as well. So let's just say for 50,000, they might end up with, I don't know, 15, 20K, something like that could qualify for the annual investment allowance, assuming that assuming that it will qualify in their instance. And and then we've got sort of like a nice tax deduction then for them in year one.
Fantastic. Following up on that question now, what are some of the misconceptions that you have faced about the service that you provide? Capital allowance, capital expenditure. What are some of the misconceptions? Because I've just given you one just now that, I'm not doing a project that's big enough.
Mm-hmm.
What are some of the misconceptions that you have faced, and what did you do to have to overcome it?
So many, Samuel, to be honest. But I'll name a few. So I've had clients acquire properties, and then after that, these are properties that they know that they were going to hold. They were either going to hold it to rent or to use in their businesses, and then after that, they've tried to claim capital allowances on the acquisition price, but quite a lot of the time, unless you were involved in the actual purchase process, and there's certain documents assigned with vendor or from vendor, then it can often be the case that unfortunately those allowances are lost. So it can, if you're going to buy a property to hold freehold or in certain circumstances leaseholds as well, and you're going to spend a big amount of capital in doing so, then it's definitely worth having a word with me, and we can maybe consider what can be done and whether or not it's worth pursuing allowances as in that instance before completion. Now, in certain circumstances, if, for instance, you're buying from, let's just say you're buying a freehold from a pension fund or from a charity, there can be opportunities to claim capital allowances in those circumstances too, as well. So there are opportunities in terms of property acquisitions, but it's being there at the right time. Yeah. Other opportunities and misconceptions. A misconception can be in terms of, I've heard people say, oh, but capital allowances takes a long time to get relief. Well, I've been talking all the way through about being able to get 100% relief for certain aspects of properties and certain aspects of buildings. And that is entirely the case. And so that's something else. You know, you can actually get immediate tax savings in certain cases for aspects of your building works. Another thing I've heard of a lot as well is relating to research and development. So there's a research and development tax credit which relates to certain expenses that go through the profit and loss account. Well, if you carry out qualifying R&D, then and you're spending capital, let's just say constructing a laboratory, let's say, or an office where you undertake those R&D activities, then in certain circumstances too, it could be that you could get 100% relief for a lot of that expenditure as well. So that's something people don't necessarily always think about, the capital expenditure in the case of research and development allowances, but that's also worth considering too. Other things I've heard, I mean, I could write a book about this, but other things I've heard is people saying that their accountants have said that because expenditure was incurred in prior years, you can no longer make the claim. Well, that's often not the case. There are particular rules that we need to make sure, for instance, that you maybe still own the asset, things like that. But where you've got construction, fit out, refurbishment expenditure, etc., where you've not claimed appropriately on it in prior years, then it may be possible to claim now. It should be said that I would always recommend we claim as soon as possible in year if we can. It's always worth, as I was to reiterate what I was saying earlier, it's always worth being on the front foot with it, because there are incentives in terms of making claims for expenditure in year, but historic expenditure is not out of the picture and should definitely be considered. It might qualify for slower relief or slightly reduced relief in certain circumstances, but it's definitely worth considering. Another, probably, I suppose, on this list, my last one for now, although I'm sure there'll be lots I can think of given more time, is missing information. Quite a lot of the time with constructions, you really don't have a lot of information, maybe from the builder. Quite often builders don't necessarily put a lot of detail into the quotes and the change orders, etc., relating to a build. But it is possible there are techniques that can be used in determining the expenditure and what is a fair claim for that sort of expenditure too. So it may still be possible to make that claim, and it's just worth, giving it some thought.
Fantastic. How far back have you been able to claim? How far back have you been able to claim?
Well, if you still own the asset, let's just say you bought something 5 years ago and you've never claimed on it. If you still own the asset, it may still be possible to claim.
Oh wow! And what we've been saying,
that's not a limit, but yeah.
Yeah, but at least knowing that you can actually go back that far back, because a lot of people don't actually think that.
No, that's right. And I've got some clients as well where, in fact, I think I might have even, I'm trying to remember, it was quite a while ago now, but I've got some clients where they spent the money and they just did not have the time really, or I suppose, the money to fund a capital allowances claim. And I should say, actually, the time spent is mine on these things. It doesn't actually use much of my clients' time, but they just really, for them, it was the cash. They were loss making. They were in a phase of their business where they were growing, and they just needed to focus solely on that, and they didn't have the manpower for anything else. So for that reason, they didn't claim capital allowances for a number of years, and so I was able to go back, and they had a number of sites. And again, it was a case of trying to work out what was still there, all of that good sort of stuff.
That's amazing. And for somebody that wanted to claim, you mentioned that, some of these builders' documentations, material they may not have. Somebody that wanted to make a claim, what are the kind of documentations that you would be requesting from them?
Well, in an ideal world, and if this ideal world does exist, there are clients that do have this information. There'll be a lovely bill of quantities with the original cost information. There will be the variations and changes to provisional sums as well. So all of that could feed into the eventual claim as to a detailed analysis of what the expenditure related to.
Fantastic. If somebody came to you and said, I've lost all my receipts, I've lost all my invoices, what chance do they have of making a claim?
I think what we would need to do is we would need to have it. I think in the case of a building, it would be quite hard to lose as much of that. But, there will be all kinds of evidence. There will be bank statements. There will be all sorts of things that can prove who they spent money with, and etc. And also, if there was a builder involved, then you may well be able to get the corresponding information from the builder too. I mean, there's all sorts of techniques that can be used, and it changes from client to client depending on what's missing, to be honest. But also, it's a case of really being able to being hyper aware of what is actually there in the building, and what has been claimed on and what hasn't been claimed on, and doing a bit of detective work there.
Fantastic. It's quite clear that you're so passionate about what age you do. Almost when you're speaking about it, your eyes seem to clear up. What drives this passion? What wakes you up? What gets you excited daily regarding your work?
I find I just really like to work with others. I like to get a lot of satisfaction out of working within the industry as well. So the construction processes are always very interesting, and quite often, if you're with a client from planning through to eventual claim, that can be sort of 4 or 5 years sometimes. With our planning systems the way they are, and financing and everything, it can take forever for these things to be off the ground. So it is interesting, and you get to live through the day-to-day dramas that happen with these constructions as well. But then also, I suppose, from my own point of view, for those very long multi-year constructions, quite often be doing the claim on an annual basis and getting the cash back for the clients as you go. That's, I think, for a claim that long, you probably would be looking at an annual a process that long. You would be looking at an annual claim sort of situation.
Wow. Are there any common industries that tend to miss out?
I would say a lot of the not a specific industry. I wouldn't say. I would say where the clients that would be spending a significant amount on refurbs and fit outs. Now, that's quite a lot of that be retail and restaurateurs, and speaking to the kind of startup arena, I suppose a lot of them are exactly what I was talking about just now, where you've got a situation where you've got a client who they're just trying to run their businesses, and those businesses can quite often be 24-hour businesses requiring manpower day in, day out, and also cash hungry as well. So they don't really have the time to then also consider anything to do with their taxes or anything else. And it's trying to then help them get on top of that when they've met a certain size and move forward as well.
Fantastic. You said something interesting just then, and I mentioned right at the top of today about the different industries that you help out. Some of the misconceptions we have is you work with property. This is where the capital allowances and claims can come. But you've mentioned that you've worked a lot with within the startup industry. How have you been able to make claims? Because we work a lot with a lot of companies in the startup.
Yeah.
I think that R&D tax is quite common. I think it's well known.
Mm-hmm.
But capital expenditures and allowances, how have you been able to benefit them?
Well, again, it will be where the types of clients where they have, well, first of all, they need to have capital expenditure. So that crossing that bridge. But once they've got that, then they are typically going to early stage invest in capital required for their businesses. So that is how they're starting out.
Yeah.
And quite often, a lot of these businesses as well, they've got so many brilliant ideas about where they're taking the next venture, how they're going to expand these properties, what they're going to do next, whether it's maybe move location, extend, add something, new features, etc., etc. So it does. It definitely feeds into the startup industry because they are starting out their businesses, and sometimes they're acquiring properties that they're totally repurposing and using for a totally new business of their own.
Fantastic. You mentioned earlier on that you specialize in remediation and contaminated land claims.
Mm-hmm.
Can you explain what that involves and why it's important for businesses to explore these claims?
Yeah. So, well, what that will involve is as we were saying, was the where you're removing or controlling contaminations on your site, and you were not the polluter in any way. There are lots and lots of rules that we need to go through in terms of whether or not you would qualify for that particular relief. It is just for companies as well, as we're saying. What I would do is I would be very, very interested in the methodology adopted to control or remove that particular contaminant. I would be very, very interested in the type of cost incurred as well, because only certain costs qualify. And also the tax profile of the client. Are they loss making? Are they profitable? What is this asset? Is it a capital asset? Is it an asset that is stock? So all sorts of things can feed into the ultimate result as to whether the incentive is available, how much is available, and the potential saving for the client as well.
Fantastic. So if a company has Japanese knotweed,
Yeah.
is not aware of the service you provide, clears the Japanese knotweed at a huge cost to them. 6 months later,
Yeah.
they are advised by either their accountant or a friend that actually you could have claimed on that. What should be their next step?
But speaking to me, they can speak to me, and I will certainly help them through the rest. I will, be looking at the cost they've incurred. I will also, there will be no doubt with the removal of Japanese knotweed, something like that, there will be all sorts of reports, etc., prepared. Interested in all of those, all of that sort of thing will be the items that I would be interested in looking at in order to help decide what their claim might look like.
Fantastic. And to our viewers as well, when we talk about Japanese knotweed, is this kind of weed plant that grows that makes it almost impossible to build, or it's going to have a long-term effect. And so what happens in situations like that is it has to be removed, but it can only be removed by specialists. And these specialists usually do come at a premium. And so what we're discussing now is how to get it out, but yet you can still make claims on that because that is a form of contaminated land. So please, our viewers, I hope that makes sense to you as well. What types of contaminations are typically covered in the claim? We've mentioned Japanese knotweed. What other?
So we were talking about, I mean, the other ones I tend to see almost all the time are asbestos and hydrocarbons. So they are very frequently and asbestos is number one of that list. Frequently, it was installed in a number of buildings, and well, almost every single building out there must have had some kind of asbestos at a certain stage. And so for that reason, there is the necessity to deal with it appropriately as and when you're building and come across it.
Fantastic. Thank you so much for your insights. I think that honestly, I've been blown away. I've known most of this, but your in-depth knowledge has really blown me away on this as well. Okay, so what I want now is some case studies. Can you give an example of clients you've worked with where capital allowance or remediation claims were made a significant impact on their business, and what did they learn through the process?
Yes. Yes. Well, as every client I've worked for, the capital allowances claims have made a big difference, because I suppose if I put it this way, the capital expenditure is always considerable. So then being able to get, in some cases, 25% corporation tax relief in year one for some of that expenditure offsets dramatically their corporation tax bill, which then reduces the amount of corporation tax they also have to pay out of the door as well. There's cash management when you've got a very big project that you spent your money on, investing in buildings and extensions and etc. Cash management is key. That is the big thing, because there is so much cash going out of the door. So, yeah. Samuel, I think I've already spoken about this particular one. Did I talk about the 500k savings earlier? Did I talk about that? I think I might have done.
No, I don't believe so. I think you gave, but I'm not sure if you gave figures.
Oh, okay.
Yeah, please go ahead.
All right, thanks. Sorry. Well, we can cut that down. Right. Yeah. So, as I say, hotelier hadn't claimed for a large construction they'd built, and so they'd claimed. I was able to get them back 500k of tax over 2 years, which was a real benefit to them.
Yeah.
And that really helped their cash flow as well. They had mortgages to manage, staff to pay, and they were trying to grow this business. So that I think it actually managed to wipe out 2 years worth of corporate tax for them.
Wow.
And but then if you think about it from the point of view of, then they were able to grow their staff, then they were able to grow their business, and so it gave them the breathing space they needed.
Yeah. You did speak about the company, but I don't think you gave details like that. And
I just can't remember them off the top of my head. That's all. So.
Fantastic. And when advising businesses, what is one of the most common areas of capital expenditure that gets overlooked for tax relief, and why do you think that happens?
Yes, there are all sorts of costs that accountants will have different experience when it comes to capital allowances. Every single accountant, some of them will be familiar with the capital allowances regime, and some of them will have far less experience. And so it very much depends on how much experience they've got and the depth of knowledge as to what they will miss from that. There are common costs that will be missed, but usually as a category, refurbishments, fit outs, if they sat, that quite often they'll be sat there and nobody will claim on them because they don't have the expertise. And also the client doesn't have necessarily, sometimes you find out that they've been asking for the wrong information as well. So the client hasn't produced the information sufficient for that purpose as well. And again, that all comes back to understanding how this information is compiled in the first place. Those are the particular categories. There are other categories within that as well, where I've often seen they've been categorized in the wrong place too.
Fantastic. I think as well, you said talking about categorizing in the wrong place, it really is good to have a good setup from the offset. I think what I find with a lot of companies is, whilst they're starting off, they don't see the importance to have their finances in place, whether it's a chart of accounts, whether it's your accounting itself, and whether to just have the right people as part of your team.
Yeah.
When they grow and they do another project and they do another project and realize the things that weren't put in place, it just gets into a mess, if I'm honest with you. So please, guys, if you're out there listening, it's important that you try to get it right the first time. All right, we're here to reach out to help you guys, so please feel free to reach out to us. Another question I have, Helen, is how do you see the landscape of tax savings, specifically around capital allowances and remediation of contaminated lands, evolving in the next few years? And are there any legislation changes or trends businesses should be aware of?
Yeah, well, I suppose taking the last point, legislation changes or trends businesses should be aware of. Recently, and it's been talked about for ages and ages, they've been talking about the abolition of the furnished holiday let treatment, and capital allowances were particularly beneficial to that community. Now, this is no big surprise. It's been something that's been bandied about as the abolition of furnished holiday lets for a very long time. But in the capital allowances regime in particular, there have been a significant number of changes over the last recent years. And actually, it's added complexity to what is already, to be honest, a complex area.
Yeah.
My hope is that furnished holiday let aside, which I think the abolition of would probably also cause additional complexities, I would really hope that there are fewer legislation changes. Where they want to simplify the legislation, that's fine, but I think it's now got to the point where actually, with inflation reducing, with interest rates reducing, let's also build a bit of certainty into our tax legislation, keep things as they are for a while, and hopefully that should encourage further investment, is the way I look at these things.
Yeah, I 100% agree to that, and restricting generally the barrier to entry. So I 100% agree with that. My next question is, with increasing awareness around sustainability, how are tax incentives, such as those around contaminated land remediation, helping business contribute to a greener future?
Yeah, so there are targeted tax incentives, as you were saying. There are there is the contaminated land tax relief, which we've been discussing about, which is targeted to remove certain contaminants, control certain contaminants from land and property. And it's a very beneficial tax incentive, but comes with a lot of hurdles to jump through in order to make sure the claim is accurate and complete. And then there's targeted tax incentives for instance, low CO2 emissions for cars and goods vehicles, electric vehicle charging points. Those are coming to an end soon, those particular ones. But then also there's good capital allowances too, for instance, which are general capital allowances, but available for, let's just say, a solar farm or a wind farm. If you're going to install those, build those, then there is good relief available. And every single time, though, that detailed analysis will need to be carried out in order to determine the availability and quantity of relief available.
Fantastic. And how can businesses align their goals with their tax incentives? So their sustainability goals with this. I'm asking you this now as advice to upcoming businesses, how they can align their sustainability goals with their tax incentives.
I think if you've got sustainability goals, then presumably you've got some capital expenditure goals that also relate to that as well. And I guess it's considering the extent to which those would qualify for particular reliefs, what reliefs are available for that expenditure as well. And very happy to talk to people to expand on that discussion and see whether or not there is additional relief available.
Fantastic. And are there any environmental benefits that clients are usually surprised at when pursuing contaminated land claims?
I think there are some clients, particularly in the building construction trade, who may well have heard of this particular relief, but others are, I think, often surprised at the amount of the incentive available. And the reason they're surprised is because, again, it's just not widely publicised. And as I say, though, there are some strict rules that we need to fall within in order to be compliant and make sure we qualify.
Fantastic. Helen, I really want to appreciate you for your time today. Honestly, it's been so insightful, I think is the word. And please, to our listeners, please take the opportunity to go through this entire podcast, especially if you're going through any projects or any businesses that involve capital allowance, and listen to this podcast. There is a wealth of knowledge packed in this podcast. And then if you need to reach out to myself or Helen, the details again will be on all of our platforms as well, whether Spotify, Apple, and YouTube as well. Helen, what would you say has been the most challenging or rewarding part of your career in tax industry, and how have your experiences shaped the way you work with your clients today?
So I'm an optimist, so I would always look towards what's been the most rewarding side. And for me, I would think of setting up my own business a few years ago, which is what I've done now. And it's put me on another level with my clients. I too am a business owner, and I think in a similar way to them. We have the same challenges, often lots in common as a result, and can really see things from their point of view as well. So that has had the added benefit of really being able to actually, empathize often with my clients and the way that they want to work. Because you can't be, the thing about being a business owner is you can't be expected to know everything, but somehow a lot of the rules and regs out there assume that you do. So yeah, working on these things together to try and help them get their tax savings, help them be as compliant as they can, etc.
Fantastic. And have you had any difficult situation in terms with either clients or even maybe projects? And how did you handle it?
Not for a very long time, to be perfectly honest. Possibly my very early career, but yeah, I can't. I think the thing is, once you've been doing a job for a very long time, it just, you just staying within your job zone. And I think that's probably the best way.
Fantastic. How would you what advice would you give somebody that wanted to get in tax? Maybe a young person. I noticed you said that you left university, you went on a placement. You worked there for a few years before you went to one of the big fours. Just for our viewers as well, is it okay you tell us which of the big fours that you went to?
I was in KPMG and Deloitte.
Fantastic.
Yeah, so two of them.
And I have to say as well, right, that you are actually quite humble about it, where you say top four, but you actually quite climbed a rank there. You made it to manager director level, if I'm correct.
Senior associate, I think, was my final title in the end. Yeah.
Fantastic. And so somebody that's following your path, coming up, maybe did accounting as a degree, what advice would you give them to get to where you were and where you are?
Right. Well, I'd say first of all that I think that they're on a good career path, and I think it's given me a lot over the years. What I would say is I'd advocate for them. There's two-pronged attack to training, and you never stop learning, right, throughout your career ever. So first of all, get a qualification. There are actually moves or at least discussions happening in the tax market at the moment where you might not even be able to practice in future without a qualification anyway. So, but I think it does, having a qualification supercharges you and leaves you in absolutely no doubt at all about how vast the syllabus is and how much you need to understand and learn, and maybe what areas you'd like to focus on. And I don't think there's anybody who could, to be perfectly honest, focus on all of it. Just don't think that's possible. And then once you've maybe trained with an established accountant, then experience is really key. Try and find as much experience as you possibly can.
Yeah.
One thing I'd really say to people is invest in yourself as well. Something that if I could tell younger me would be, yes, invest in yourself. Find a good business coach. Find somebody like that, a mentor who you can just talk to, and ideally outside of your employer. I think that's important. I think somebody that doesn't have all of the additional maybe politics, etc., that could be going on. I think really have somebody who can help you to determine what it is in your career that's driving you. If there is anything holding you back, what that is as well, and then and help you really build your direction as well. So and I think once you've tried a few things, as they say, you don't know if you haven't tried it, you might not like it. It's always these things. You've got to give it a shot, give it a try, and see how it works out for you. And some things you'll dismiss quickly, and some things you'll be sat there 20 years later talking about how you started out.
Fantastic. Some people have said to me, and I want to get your opinion, that is it any point going to university when they can jump in and do an accounting qualification like ACCA or so? And I mean, the person had the argument like they know when they come out of university they will have a few exemptions from things like the ACCA, but after the finishing college, would you advise to go straight and start one of those accounting qualification? What's your thoughts?
I think these days it's I still think university is a good grounding, because I think what it does is it teaches you. Now I know it's expensive, so you really need to think hard, and there's never going to be a one-size-fits-all answer to this question. But when I think about what I learned at university, it really drove me through my qualifications, professional qualifications, and ability to research, etc. That's really the key point. That's what it's the degree of additional learning and learning about the way that you learn as well. That's something that I think actually you learn throughout your life too. But I think university, you are really required to and learn how to self-study. I think particularly in the earlier education, a lot of the information is already given to you into some degree or another, and at university that changes. Yeah. So I really think that is something, if you want to build opinions about things, I mean, ask two tax advisors the same question, you'll get different answers. It's the same with all professions. Yeah. But that's because we've all built our opinions based on our own experience, based on our own research, based on our own education and training. So I think to be a rounded, as a rounded sort of researcher, as a rounded learner, and it's all about learning. When you're in tax, every single year it changes. You have to keep learning all of the time. Then I would advocate for university, but I am wholly with anybody who says, but it's too expensive. I totally understand that.
Fantastic. It's good to hear your insights on that question. It's a question I oftentimes receive, and so sometimes do like to throw up to our guest every now and again. Finally, you could just tell us where we can find you as well. I know you didn't want me to touch on this too much beforehand, but you could let us know where we find you. And lastly, actually, I have to say as well that Helen, we've discovered, is very passionate on what she does, and not so much so, not just that, she actually has a community of women that she, enlightens and part of clubs and sit on boards and so on and so forth. Would you like to tell us a little bit more about this before we round up, about what you do?
Yeah, so I'm part of Bristol Women in Tax, and also part of the Bristol Chartered Institute of Tax Committee as well. And we have a series of events based on soft skills in particular. Soft skills, I should say, are just as important as technical skills in terms of having a rounded offering for your clients and also for your colleagues, etc. It's all about ways of being able to work together, communication styles, etc., 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 and can make all the difference in your careers. And so I actually just finished one particular soft skill event just the other day, and yes, and it's of interest to people in the community from all sectors in the tax community and all experiences, from those that have been in their career a long time, like me, through to the junior, more starters in the industry too, and really making sure that we've got a well-rounded group of people. That's what the aim is, and to help people through their day-to-day issues and things like that. It's great to have a community that you can do that with.
I agree. I 100% agree. Well, Helen, thank you so much for your time. Honestly, it's been a really, really, really enjoyable chat, enjoyable podcast, to be honest, and insightful, as I mentioned before. Before we round up, is there any last words you wanna share with our audience?
I think that, yes, I think that time and time again, experience has taught me that once you've decided what you're going to do with this property, if you're, like I was saying earlier, if you're going to acquire it and you want to hold it for any reason, rent it out or use it in your business, once you've decided exactly what you're going to do in terms of the construction or refurbishment or fit out of that particular property, then I do think it's worth getting your capital allowances advisor involved at that point. Fantastic. And you can then really think about what reliefs that might offer you. And again, that all comes out in the mix. So you might be spending $1 million or something, or if you know on these works, but actually, if you're going to get back some taxes as a result, that cuts it down considerably.
Yeah, I agree. 100% agree. Helen, once more, I just want to appreciate you for a wonderful time together, for your knowledge and for your insights. As I mentioned before, guys, please, all of our details are going to be on all of our platforms. So once you're listening to this, just look online, look at the details, so you know where to contact Helen. Alternatively, if you contact us, we'll put you straight through to her. Once again, guys, thank you for listening to Finance for Founders. Take care of yourself. I hope you enjoyed the podcast, and we'll see you next week with another episode. You take care, guys. Bye.